Hey, it's Soleil, and this is episode 283 of the Orange Pill Investor. Where the hell is my YouTube? I thought I had brought up YouTube as well for the chats, but maybe I didn't. Should have left the music running while I figured my shit out. You, oh, not YouTube music. I picked Ben Caught Stealing because it seems like MicroStrategy, it just investing in it feels like stealing at this point. All right. Let me see if I can figure out how to. Oh boy. View your channel. All right. There we go. Live. At this point. What the hell? Okay. There we go. For God's sakes. All right. So I got the YouTube chat open. Onan says, "Good morning, legend. Right back at you." Let me see if I can move these around so I can see all the chats. At some point, I probably will figure out how to use the internet. All right, Friday is roll day. Let's see if there's anything we need to do and get after it. David, good morning. Justin, let's go. FTS, what's going? Sorry, FT Bitcoin. Let's go. Expecting any fireworks today. One of the highest in the money expirations. Yeah, I think November 15th does have a bunch of a bunch of in the monies, right? Maybe not quite as spectacular as January, but I'm really not too up on that. I never make any short term predictions, and it's kind of weird. Like usually you know more about what's going to happen in the immediate future than you do in the distant future, but I think the opposite is true with Bitcoin and MicroStrategy. I know that if I go out to a far enough timeline in the future, that Bitcoin and MicroStrategy is going to be more than it is now. But in the short term, I don't have the slightest idea. Adam says you need 350. Okay. Yeah, I don't know. I I think there was speculation about, oh, is Sailor hitting the ATM hard and just selling shares at the market. But some other people who are in the know said, look, he's just out there every day hitting the ATM. Some days more than others. Like if MSTR is pumping, maybe they're more aggressive with it. The only thing that I kind of suspected when I saw a little bit of glitch in the matrix was like, if I see Bitcoin up and I see the miners up, but I see MicroStrategy up less, I'm like, that's gotta be that's gotta be somebody out there selling. So that's completely unscientific, but if you follow any of these mining groups, they'll start dunking like, oh, mining stocks are up more than MSTR, and yeah, nanny nanny boo boo, stick your head in doo doo or whatever. And it's kind of like, yeah, zoom out, like zoom out on the chart. You don't cherry pick one day that you're up, and you made 10% more gains or something than Bitcoin or 10% more than MicroStrategy. Like You can cherry pick a few days, but that's not going to last. What's up, Hellfire? FT Bitcoin says, yeah, fun to take a stab at a weekly once in a while, but 100% agree that the leaps are far more predictable. Yeah, and there's a statistic that shows that most long calls expire worthless. And that's generally how I started making money selling options, because I'm like, okay, well, if most people are just donating to the seller, they're just donating their premiums to the seller, I wanted to be on the other end of that trade. And the seller is generally at an advantage, especially according to Tasty Trades research, under 45 days. Theta starts to accelerate maybe around 90, but not terribly. Like, I don't shit myself if my 90 days long calls are 89 days to expiration. Like, I'm not just quaking in my boots yet. But once it starts to get to 60, I start to get way more anxiety. And definitely by 45 days to expiration, I'm almost always in seller mode at that point. And that's why I took a little bit of precautions. I generally don't buy these long calls, but I've had them for about 20 days. And these are under 90 days to expiration. And as soon as I was able to double my money on them, I sold half of them. That basically means that even if MicroStrategy is under 460 by January, and these are completely worthless, I've already locked in enough profits that the worst I can do is break even at this point, and I feel like I'm playing with house money. So I feel more comfortable basically gambling with this. I it would not surprise me at all if MicroStrategy has a historic run and these print. Like, these could even be in the money by January. That's not out of the realm of possibility. But I'm certainly not counting on it. And yeah, anything under 90 just starts to give me the willies a little bit. And the shorter and shorter it gets, the more nervous I become. And weeklies is like, yeah, that's like at the craps table. Yeah, I'm crossing my fingers for you. I hope you get it too. All right. Onan says, Soleil, do you have a referral link or benefit for Tasty Trade? I don't know. I don't even know if they do referral links. And the earlier question, what do we think all the expirations today mean for the action? I haven't the slightest idea. The only thing that makes me a little bit nervous is Sailor's come right out and said he's not worried about your strike price. if you're counting on a certain strike price and MSTR seems to be running up, he's not like, oh, let me take my foot off the gas pedal so these options traders can go in the money. Like, he's not worried about that. He's worried about maximum Bitcoin accretion for his shareholders. So I tried to run a few like momentum trades when MSTR was going over 52-week highs. I tried it like 3 times. I think I won it once out of the 3 times. So I'm definitely not a momentum trader. I am not the guy for advice on what to do with 0 DTE, 7 DTE long calls. Of course, my session expired. All right, I do have to. I'm on break, so I do have to get back to work at some point. So let me just hurry up and try to get through this roll day. These are 35 days to expiration. They were in the money. This one was in the money just recently. But I will probably just sit on my hands for another 35 days and see what happens. If I end up having to pay to roll, I want to roll at the last minute so I'm not paying for all the extrinsic value that's built into this. Since this is out of the money, 100% of its price is extrinsic, meaning that if I sit on my hands and do nothing and the price of MicroStrategy stays 330 for the next 35 days, the $4,000 of value in this option will drain into my account. And, some people say there's no guarantees in life or even in the stock market. But, I mean, when you sell shares, you are locked into profits. Like, that profit is guaranteed. I mean, it might take a couple days for the funds to settle, but if you take profits, you have guaranteed yourself some profits. And so when I sell a covered call, when the price was 300 or whatever, and I sell a 350, I'm locking in this $1,200 profit because they're covered with shares. And all I have to do is nothing for 45 days. And really, the $1,200 gets added to my buying power immediately. So I'm locking in profits at that moment. That is guaranteed. Now, my overall portfolio could go down because if MicroStrategy goes down, then my shares are going to collapse more than the value of the short call. But I'm just talking about just selling the call. Just the act of selling a call is taking guaranteed profits. There's nothing that anyone can do to stop me from collecting this $1,200 if I just sit and wait for it to expire. Every single penny of this extrinsic value has to drain out of the option by expiration. Now, it could gain some intrinsic value, like when this was in the money. As soon as an option becomes in the money, it gains intrinsic value. And that intrinsic value could, depending if MicroStrategy goes to 500, that intrinsic value could completely decimate this little piddly extrinsic value that I collected. But covered calls are a defined risk trade. And if my shares get called away at 350 and it runs to 400, I'll just golf clap for the guy who bought that call. And we can both pat ourselves on the back because we both profited. And I've talked about it before, but it's another reason why I kind of like covered calls. I know it's defined risk. You're sacrificing unlimited upside. But tell me another strategy where both parties can profit. So if my MicroStrategy trade price is $144 a share, right? So if I sell this 350, and let's say that the price runs to 500, I'm going to get called away at 350, which means my profit is from 150 to 350. I made $200 per share profit times 100. That's 20 grand. Okay. Yay me. I made 20 grand. Now I missed out on the 350 because I capped my upside at 350 and it ran to 500. So the other guy made $150 per share in profit. So he made 15 grand. Plus I got paid the 1,200, right? So we both made money. So I'm not kicking myself that I missed out on the unlimited upside to a certain extent. Like, it's okay if everybody eats. That's kind of the thing. Now, in my IRA, when I only had 100 shares and they got called away, that was kind of painful. So, this is a margin account. If I end up wanting to pay to roll, I can do that. But yeah, if someone just has 100 shares and you're like, you know what, it's going to really piss me off if those 100 shares get called away, then don't do it, right? So I talk a lot of, I talk about all the good things for the covered call strategy, but I also try to make sure that the limited upside can and will happen. Like, the delta isn't an exact approximation, but it's fairly close enough to just eyeball it, right? So what the delta on this 440 strike is 34. So I should get wrecked on this covered call a third of the time. I think some people hear about the covered call strategy and they're like, oh, it's just free money. I'm going to sell this and then hope my shares don't get called away. If that's your thought process, like I'm hoping my shares don't get called away, then you're screwed, because they're absolutely going to get called away. And it's not an exact science, but I should fully expect for these strikes to get breached 34% of the time. It happens a hell of a lot more than people think. And sometimes people get burned and they're like, nope, they just swear off covered call selling forever the first time their shares get called away. So shouldn't be a surprise. You should be ready for it, and absolutely don't sell covered calls in shares that you want to hold forever. So that was a long ass winded way of saying that these long calls make me a little bit nervous, but I've already guaranteed a break even on these, so I'm okay with letting these ride. The 40 Aprils. So this is full credit to Dan Hillary, and he was talking about these. They were about 180 days to expiration, and he was talking about just rolling them out every 90 days right before theta starts to ramp up. And I was like, okay, I want in on that. That was something that I had not considered. Like I had my little covered calls, and I got my uh, leaps. I'm doing some poor man's covered calls. I'm selling covered calls against shares, and I've got leaps that I'm just speculating on. I'm just going to do nothing with these until they go in the money, and at that point, I'll decide whether I want to sell covered calls against them or just exercise or exit the positions. But I thought this was a really cool idea. So I said I know the distant future, I think, more than I do the near future. However, everything in the stock market is trade-offs. Everything in an option is trade-offs. If you're buying these leaps, then theta is going to be low. You can kind of just sit and watch, and it's easy mode. It will either print or die. And you don't have to really do much of anything. You don't have to worry about theta just collapsing your price. And then when they get down to 90 days, if you still are bullish, you can roll out, right? Or you can just let them go to all the way to expiration and make a decision on whether you want to exercise. But the trade-off, so to that, is it's not going to give you as much price action as something shorter. And that's why, people like the buying weekly long calls, because if the price rips, then you're going to print big time. Whereas these leaps aren't going to print as much. So there's a trade-off there, right? But with these at 180, it's kind of like I'm getting the closest to expiration calls that theta has not started to accelerate on. So I'm going to get the maximum price action that I can get and not be like terrified of theta just decaying the price. And then when the 180s to get to 90, boom, roll out to 90 again, or to 180 again. 90 days later, roll out to 180. So that's my plan. In January, I'm going to roll these out 180. And then in April, I'm going to roll them out again to 180. And then in May, June, July, I roll them out to 180. And then August, September, October, that will be when I'll probably make a decision on these. And by then, MicroStrategy might have like the 1,500 strikes. So these will never go in the money because I'll be constantly rolling to whatever the highest strikes are available. Every 90 days, if the $1,000 strikes are available, that's what these are getting rolled up to. So that's a completely different strategy than these short-dated long calls, which is a completely different strategy from these leaps, which is a completely different strategy from these in the money leaps that, since they are over zero point 0.7 delta, they're 0.85-ish delta. These qualify as collateral to sell poor man's covered calls against. And so I could say that these 4 covered calls are actually being collateralized by these leaps if I want to, or I can let shares get called away. Really makes no difference. So 4 different expirations, 4 different types of strikes, and 4 different strategies, really. And then I got my lone Tesla position that I refuse to part with. I'm keeping it for sentimental reasons at this point. So really nothing for me to do here today. Well, damn, as I've been talking, the price is down $20 a share. All right. Yeah, if any of these covered calls actually get down to break even, get close to what I paid for them, I will definitely close these bad boys. Quick Fingers Luke was a penny stock trader that I used to follow, and he basically said that any trade you can break even on is a good trade, because so many people trade and lose money that congratulate yourself on breaking even, because you're doing better than most of the people. And at least you live to fight another day and maybe learn something. All right, let's take a look at the IRA. Before I do that, maybe I'll just check the chat again. Dan, what up, gang? He says, Onan, please find out, would you like to get credit when I check them out? If so, you should link in the video descriptions. Okay, yeah, I'll do that. Appreciate the heads up on that. All Gone Wrong says, good morning, switched from X to here. Cool. Yeah, I started using Riverside, and it looks like I can just keep adding live platforms. I had like a Patreon, but I stopped uploading to it. And actually, I only had one subscription that I paid for on Patreon. It was Stephen Mark Ryan's channel. He's where I get my daily Tesla bull fuel. You know, my head has basically just consumed my MicroStrategy 24/7, but he keeps me kind of hyped on Tesla. So in 2025, my kind of master plan, if the stock market gods feel like smiling on me, is to take some of my MicroStrategy profits and, basically just ape into Tesla. Hopefully to catch it before they ramp out robo-taxis, and they've got a bunch of catalysts as well. But that's kind of my master plan. All right, X chat. Russ says, I just opened a poor man's covered call, bought June 300 strikes, and sold the December 420 for 27. Sweet. David says, I've got some shares for covered calls, the rest at the lowest basis I never cover. Have to make money along the way. Yeah, there you go. And it's not an all or nothing thing. Like, I've got 1,500 shares in my main account, and I've only got 4 covered calls on. So, and then with all the leaps I've got way more unlimited upside than limited at this point. All right, let's check out this IRA. I don't think there's much I need to do. So these covered calls are in the money. So I will probably do nothing here. These are just out of the money, but I could very well get wrecked on these as well. I've got 300 shares and I've got 2 leaps, so I can sell 5. Actually, I do have one more. Let's try to open this one up 4 days ago. So I'm basically upside down on every single covered call in my IRA, but I'm a little bit more reckless with it because I kind of just don't care. I feel like I'm just never going to see this money. So it just doesn't even feel real to me. So I'm a little bit more reckless with it. We'll see. But I did load up on a couple of long calls here. I couldn't help myself just grabbing a January. I've got the 2 leaps, and then I've got the 4 out of the money leaps in December. So yeah, nothing to do there. This is the joint account. This is the one where I convinced my wife to borrow from her retirement at her job. Like, I borrowed from my Vanguard account. I hate Vanguard with a perfect hatred. Like, they won't let me well, they'll let you self-direct to a certain point, but you can basically just pick from their shitty mutual funds and different stuff. So they pissed me off. I borrowed from my own retirement account, and I'm literally paying myself interest on the loan. So I wanted to just be able to be in charge of my own money, and I finally convinced her to do the same thing. So we opened up this account so we could separate the strategies and whatnot. But this also serves another purpose. So if you so everybody knows about the FDIC insurance for your checking and savings, right? But these exchange portfolios are also insured. And I think they're insured up to like $500,000. It's like double or something, whatever the regular one is. It's 250 or $500,000, something like that. But it's per category. So if you have an individual account, that's insured up to the maximum. And then if you have another account of a different type, so like an IRA is covered for that full amount, and then this joint account is covered for the full amount. So I really need to transfer a bunch of money from this individual account to the joint account so that they're both fully insured up to that. I think it's 500,000. It's either 250 or 500, whatever the hell it is. Not financial advice, but that makes sense to me. And especially if this goes where we think it's going to go, that 500,000 is not going to cover much. So, okay, the joint account. I've still got this damn CLSK call debit spread that I did just for the lulz, just to demonstrate the strategy. It's been open for 90 days. I'm trying to double up on it, but I'm basically just at a break even. So I have to freaking look at this thing every week and watch it do nothing. So I've got the 100 shares in this account. I sold a covered call 4 days ago. It's currently upside down because MicroStrategy is, even though it's down over the last couple of days, it's still up big time. Again, I nabbed a January strike. I got an April strike. I got a December strike. And I've got 4 of the Decembers at a higher strike because I wanted to. And actually, you know what? This one is a leaps, isn't it? So my delta on this one is 0.7. Forgot I had done that. I guess I was planning to run a poor man's covered call in this one as well. Okay, well we can say that this covered call is against this one. Maybe, I don't know. But yeah, nothing to do here. And this is probably because I got away from selling the weeklies back in March when I had the price was 1,200. I had the 1,400 strikes. The price went to 1,700, and I had to pay 30 grand to roll. I think I got paid 5,000 to roll it. So I think I knocked that down to like 25K, but that was pretty painful. So I've started doing the 45 days to expiration just to give myself a little bit more time to be right. And I don't, somebody asked me, have I compared the two? Have I compared? Because you can get more premium during the weeklies. And they asked me, since I'm kind of running this as a business, have I compared the returns from the weeklies to the returns on 45 days expiration? And sadly, I have to admit that I have not done a comparison to see which one is more profitable. But that is probably something that I need to do. All right, this is my fun money. This is basically my allowance that I had been kind of saving for myself. You know what I mean? This is the money that I can just do whatever I want with. And it was sitting in my savings account, and I'm like, why do I have money? Like, why do I have dollars? US dollars piss me off. So created another account and basically just sent my savings in here. So I had bought 16 leaps in January. I did the same thing. As soon as they doubled up, I sold half. And then I took that half and I bought a leaps with it, and I sold a covered call against it. So I turned this just kind of YOLO into took some profits and turned it into a covered call strategy. And then, of course, I have one more. After they came out with the 550s, I just bought another one of these. And that's generally my tendency. If I'm in the market for a long call, I generally go out and just get the one at the top of the chain. That's the one that's going to have, I'm going to be able to buy, the delta is smaller there, but I'm going to be able to buy the most delta for the least amount of money, just way up here. Damn, the 760s are available. And this is just going to keep happening over the next year. The 800s will be available, then the 850s, then the 950s, then the 1000. And every time I want to buy more long calls, I'm going straight there. Of course, there's trade-offs with it. Theta is higher, way out of the money like that. So the option will decay faster. So I'm not saying it's the perfect option. There's no perfect option. Everything has a trade-off. There's going to be some positives and some negatives. Always do a SWOT assessment. Was it strengths, weaknesses, opportunities, and threats? Yeah, that's it. And I'm kind of looking forward to this 5K account, right? Because I'm getting absolutely wrecked on these at the money puts I sold. So I can't wait to talk about these. Okay, so the price on CLSK and Riot were running, right? And I had 200 shares of CLSK get called away at like 11 or 12 or something. And so I had buying power. And I'm like, all right, what am I going to do with the buying power? I'm going to just go right back to step one of the wheel. And so I sold these at the money puts. I got paid $1, right? I got paid $1 for the 16 and a half strikes. So it looks like I will get assigned. So I will be the proud owner of more CLSK and Riot shares after today. And my cost basis officially, according to Robinhood, is going to be $16.50, which means I'm losing like $300 on this. Now, of course, I got paid $1, so now my cost basis is really going to be $15.50. And when this gets averaged into my average cost of $11.86, it will raise my average cost up a little bit. But of course, on Monday, I will just turn around and sell a covered call for however much I can get, and I will reduce my cost basis again. That is the name of the game when you're running the wheel. It's just constantly reducing cost basis. And eventually, if you sell enough covered calls against something, right? If you collect 1% a week for 100 weeks, the stock is completely free, right? You collect 1% 100 times, that's 100% of the purchase price. And now you own that stock for $0. And it doesn't matter if the price goes up, down, or trades sideways because they're free. Now that's like a hypothetical situation that probably never happened. I can't imagine selling 100 covered calls in a row and it not going over your strikes at least once. Like that's insane. But it's just a thought experiment and how I think about the strategy in general. And it worked for me big time because when I first started trading, I was pretty agnostic. When people say, oh, do this strategy if you're bullish or do this strategy if you're bearish, I was like, why would I ever be bullish? Why would I ever be bearish? Like, I don't have the slightest idea whether any of this shit's going to go up, down, or, or not. in general, the stock market's gone up over the last 100 years. So in general, I think, number go up is probably likely, but how the hell would I know? So covered call strategy made sense to me. Selling, running the wheel made sense to me. But it wasn't until I saw Quant Rose 1 that I was like, oh, I actually have reasons to be bullish on something. I guess I was kind of white pilled on Tesla before that. But yeah, before those two tickers, I would just trade in and out of anything that had a lot of premium. Just didn't care. Hold it for 2 weeks. Sell cash secured puts, get assigned, hold it for 2 weeks, get called away. Doesn't matter. Move on to something else that has high premium. That was kind of the way I did business. But when I started getting more orange pilled, I started gravitating towards anything that was a Bitcoin derivative. So that's why I'm running the mining stocks. But in 2026 and 2027, I think the mining stocks will probably be hot garbage, and I might be looking to even short them. We'll see. But I think some people, they sell a cash secured put for, right, the 14, or what did I do? 1650 strike, right? And then they start to panic and like, oh, I don't want to get assigned the shares. I'm going to pay to roll. I'm not paying to roll. I'm just going to let the wheel do what the wheel does. Sell cash secured puts, get assigned, sell covered calls until they're called away. That's just how it is. With MicroStrategy, I'm obviously a lot more gun shy about it, but I think the unlimited upside is too great in MicroStrategy to just completely run the wheel mechanically with just blindfolded. I think that's definitely a way to underperform. So that's why even as an option seller, I've transitioned to owning long calls in MicroStrategy, and I just kind of can't help myself. But in this scenario, I don't have any emotional attachment to CleanSpark. I don't know if they're better than any of the other miners. I'm not going to waste my time researching their fundamentals and blah, blah, blah. I don't really care. So this doesn't bother me. This is just what the wheel doing what the wheel does. I'll be assigned another 100 shares on Monday. I'll sell a covered call, rinse and repeat. Same thing with Riot. What's Riot down to now? 1150 again, right? And this is also the reason why I didn't freak out and panic roll these 13 strikes on CLSK when it was running to 15. People panic again, like, oh, I got the 13 strikes. CLSK is 15. I have to roll it. I have to roll it to the 15. I have to roll it to the 17. I have to roll it out. No, you don't. I will sit on my hands and I will do nothing as long as these are in the money. If I have to pay to roll these, I'm going to wait until December frickin' 19th, the day before expiration, to make my decision on this. If I can ever buy them back cheaper than I sold them, I will do that early. I will manage the trade early in that scenario. But I'm not panicking and saying, okay, Riot was 13 or 14, I got to roll. No, that's the worst time to roll because now I have to pay for all the extrinsic value. And then the price can just drop on me, right? So I'm going to have to pay to roll up, and then I'm going to lose money when it whipsaws back down. So when you buy shares, you're not supposed to FOMO and buy at the top and then panic sell at the bottom, right? That's how people lose money. Same thing with options. You don't panic roll just because your strikes are threatened. I'm just sitting here holding on to this April long call. I will probably roll it in January, just like in the main accounts. And again, I've got one Tesla long call here that I can't bring myself to close. I'm going to probably hold this one for at least a year. Well, I don't know if I've had it for a year. How long have I had this? I bought it. Did I buy it in October? Is this the the 560? Yeah. So I guess I bought it in October. I can't hold it for a year because it expires in June, but I'll hold it till at least March. and then decide if I want to roll it out. All right, so that was a lot of talking to do absolutely nothing. I don't think I placed a single trade. Let me just take a look at my buying power. So this is saying I have 3,000 in cash, but I don't trust Robinhood's margin calculations, because this should say if I have cash and no margin use, this should say that my risk is 0, not low. So I don't even know how to interpret these freaking numbers. Robinhood needs to get their shit together with this, because I can't even tell exactly how much margin I'm using. Maybe it's the difference between options collateral and individual cash. Maybe I'm using 13 in margin. Or the difference between margin total and the total. Am I using 900 in margin? I don't know. I need a freaking TED talk about how to tell how much I. Okay, let me see if I view details. Maybe this will tell me something. Okay. Your available margin is 16,000. Okay. But how much am I using? All right, screw you, Robinhood. I love their user interface, but this kind of pisses me off. So I don't think I need to open any new trades because I don't think I really have cash. It's saying I have cash, but I think this is a lie. I don't think that's true. All right, we'll see. I think that's it. Let's check the chat, and then I got to call it. Let me scroll up. All gone. Oh, I'm sorry. That's not all gone wrong. That's AI gone wrong. That's even better. AI gone wrong. Fun fact on that. Jeff Booth is probably my I shouldn't say favorite Bitcoiner, but he was the one guy where after I had watched hundreds of hours of, basically every Sailor video I could find and all of his stuff on Breedlove's What is Money podcast and just, tons of Saifedean and, just a bunch of those, I guess, Bitcoin influencers or whatever. And Jeff Booth was the one that was kind of like, after I was kind of getting bored, I'm like, all right, there's nothing new here. Nobody's saying anything new. Jeff Booth was the one that really got me. I was like, oh, this guy's very insightful. And one of the things that he is, I guess, bullish about Bitcoin about is that if we didn't have Bitcoin, AI, what does AI do? AI just makes everything more efficient. It's going to make everything exponentially more efficient. So if countries are trying to control their citizens, it's just going to make that exponentially more efficient. So since Bitcoin is repricing the entire world and it's basically imposing the free market on the world, AI can now be a tool making Bitcoin more efficient at doing what it does. So I'm a little bit bullish on AI simply because Bitcoin exists. But if it didn't, yeah, we'd have Terminator in our future. I think freaking Skynet would be a decade away. So I'm not as fearful of AI as I was. And it's funny. This is the only criticism that I have really of Elon Musk. I don't care how political he gets, and I don't care if he goes on Rogan and smokes weed and tanks the share price, temporarily. A lot of the things that people criticize Elon Musk about, I just shrug off. The only thing that gave me a little bit of pause was when he wanted AI regulation, right? Anything that the government touches, they fuck it up. So, like worst case scenario for me is that the government, who screws up everything they touch, starts regulating AI and just makes that 10 times worse. And it reinforced it because there was another Jeff Booth interview where he's like, look, the cost of AI writing code is basically zero. So you can't really make money with AI because the cost of everything just approaches its what does he say? The cost of marginal production. Yeah, I'm butchering that big time. But how are you going to profit from lines of code writing lines of code? It costs nothing. So the only way that they're going to be able to make money off of it in the short term is by creating little moats and basically having government imposed monopolies. So that was the only thing that scared me. Musk was talking about wanting regulation, and it just seems like that's a way for people who are into AI to kind of manipulate the market so that they have a government imposed monopoly instead of just a monopoly that you get from doing the right thing and offering a good product. So that's the only thing that Musk has ever really done that was just kind of made me double take, really. But plenty of other people have plenty of other criticisms that they're worried about, but that's the only one that bothered me, and I've never heard anybody else really talk about it besides Jeff Booth. All right, Onan says this resonates. Poker players fold 80%, 85% of hands generally and don't win every hand they play. That's an excellent point because there's two ways to profit in the stock market, right? You're either going to make big you're either going to win 15% of the time and win big, right? Those few 15% of the wins that you get have to outweigh the 85% of your losses. Or as an option seller, I kind of take the other side. So I take small wins, probably 85% of the time, and then 15% of the time, the price rips to infinity and my shares get called away. Since it's a defined risk trade, I technically make sure that I can never suffer a large loss. Worst case scenario is instead of suffering a large loss, I have to suffer missing out on a large profit. But AI said, just tune in. Why not touch put side? Not much activities on put side for MicroStrategy. Yeah, I did. I sold a put on MicroStrategy. I think it was in the joint account, and the price went up, and I ended up having to just buy it back, and I took profits on it. But yeah, I would consider this dip an opportunity to do that. But since I'm trying to, I still have 30 grand in margin use here. So I'm really not looking to add any new positions until I'm completely margin free, completely debt free. I borrowed like 100 grand, 2 signature loans, 30 off my HELOC, and 10. I had a paid off SUV, and I'm like, all right. I went back to the bank and they gave me 10 grand against my SUV, and I just slammed it all into MicroStrategy. So I've got to unwind a bunch of this debt, but absolutely, if somebody's got dry powder right now, and if I had dry powder, I wouldn't mind selling, even an at the money put in MicroStrategy for next week. If I get assigned at 332, my cost basis gets lowered by, 2 grand anyway. And then if I get assigned, I can just restart the wheel again. But and you don't have to be this aggressive with the premium either. You can sell the 300s and collect $800. 1% of 300 would be $3, right? And this is like 2.5% returns on a week. And but you don't want to be selling puts in anything that you don't want to be forced to own, right? Because every time you sell an option, you're giving the other person control, and that's basically what they're buying. They're buying control of your of your property, right? They get to decide if they want it or if they don't want it. But yeah, I think on this, I think every dip in MicroStrategy over the next year is a buying opportunity. So yeah, I'm definitely I'm definitely co-signing that, not financial advice, but all right. Okay, so David says, so you always let cash secured puts go to expiration. No, no, no. Every single option that I sell gets managed early if at all possible. So if I sold a cash secured put, let's just say the 300. If I sell the 300 for 900 bucks for next week, I basically prorate how much time to expiration has happened. And if there's not very much value left compared to the amount of time left, then I close it early. So on a weekly option, theta. Do I have theta? Yeah. Anyway, there's 5 trading days, so approximately 20% of this premium is going to drain out per day. It's actually not that simple because the theta acceleration curve, especially for at the money options, is weighted heavily towards the very last day. But if the price of MicroStrategy goes up, right, on Monday, and I can buy this $900 cash secured put back for half price on Monday, like I can collect half of it in one trading day, and I got to wait another 4 days to collect the other half. Screw that, I'm out. I'm buying it back for 450 and congratulating myself. Now I could choose to roll up a strike and collect more premium if I still think it's, if I'm bullish on the stock. I can always just roll up to a higher strike and try to collect another $1,000. But of course, that runs you the risk of the price going back down. So, and then the same thing on the 45 days to expiration ones. If I sold a cash secured put, 300s and collected, don't have my glasses on. Okay, so I collect $3,000 here. I try to collect half of this every 2 to 3 weeks. So if a week goes by and I can already buy it back for 1,600, done deal. I'm gonna take some quick profits early. But if a week goes by and it's still worth $3,000, like, no, there's plenty more extrinsic value to collect. I'm not going to close it early. And then I'm gonna hold these to expiration if they go in the money. That's generally my rule of thumb. If I sell a covered call or I sell a cash secured put and they go in the money, then I just sit and do nothing and I wait till very close to expiration. That increases my chances of the other person exercising early. But I just don't like rolling in the money options that I've sold early. I don't like paying for all of that intrinsic value. K4 says, thanks for this and enjoy the weekend. Torn. Sosnoff is in Dublin today. Gonna meet him for some tasty talk and a beer. Cheers to the 100K party soon. Hells yeah. Cannot wait. Oh, so Dan Runyon says rolling from MicroStrategy to Tesla has been your plan as well. Cool. I guess I'm kind of using it as a pairs trade. I would assume even though Tesla owns Bitcoin, they're not priced according to Bitcoin's price. They're priced according to what they're doing in the energy space, right? Doesn't have jack shit to do with Bitcoin's price. So I guess I would consider them uncorrelated assets, even though they both get rekt. They're both considered tech plays. So in that sense, they're in the same sector, so they're not completely uncorrelated. But yeah, if Tesla has a big announcement, it's going to run, and MicroStrategy's not. And then when Bitcoin runs, MicroStrategy is going to run, and Tesla probably won't do anything on big Bitcoin news, I don't think. All right, I'm just going to catch up on the rest of these comments. Okay, so Nathan says, any books you like for explaining option strategies, any spreadsheets or tools you use for calculations and simulating strategies. Yeah, so I used to religiously document in a spreadsheet what I got paid for an option, what I had to pay to roll it, did I profit on it? I had just tabs and tabs and tabs of spreadsheets. And there's a good one that you can get from Inthemoney's channel. And uh, it's either one of his videos about running the wheel or selling covered calls, but he actually has a link to his spreadsheet that he put together. And if you get assigned, you can put that assigned value in, and you can put how much you got paid for it, and it will calculate your true cost basis. But absolutely, everyone should keep a trade journal and track whether you're making money or not. I mean, you can see whether your account's going up or not, but when you're new and you're getting serious about it, you should absolutely track those things. And I'm just comfortable enough at this point. I haven't continued with that. I do a weekly profit loss spreadsheet every week. And then I do like a little bit of weekly report to some family and friends. We have like a little email string. So I keep that as kind of like my trade journal. If I can find it, I will link it in the, at least on X. Somebody found it themselves by just Googling Inthemoney's channel and then finding either his covered call videos or his wheel videos. And he links a copy to his spreadsheet in there. And it's a really good one. But any books. So mostly I taught myself watching a metric ass ton of Tasty Trade videos, and then this guy Inthemoney. Kamikaze Cash also has a good YouTube channel. He's got some good cash secured puts and wheel videos, covered call videos. But actual books that I read, I think most Bitcoiners probably have heard of Bitcoin University's YouTube channel and X channel, Matthew Cratter. Before he was Bitcoin University, he was actually Trader University. And he's got a lot of good trading videos. And he's actually written, I don't know, 10 books or something. I think I read his covered calls one. That one would probably be good. And I think I read his Black Book of Trade Secrets or something. But it's been so long, I can't specifically recommend them because I don't even remember what was in them, but he's brilliant. So I know damn well I didn't read anything in his strategies that I could actually, like dissect and be like, oh no, he's wrong about that. Like, no, everything he's ever put out has been gold. So maybe take a look at him, Matthew Cratter. I liked Trade the Trader. So that's not option specific, but that's it's almost like more psychological. Like you're not trading stocks, you're actually trading the person on the other end of the trade more so. So that one's probably good. People that I respect have recommended momentum. Oh, I'm sorry. Trend following. That's still on my TBR though. I haven't gotten around to it. Somebody recommended Market Wizards to me. Somebody that I respect recommended it. But they're still, I downloaded them, but I still haven't read them. I haven't gotten around to it. So, and also Tasty Trade apparently has a backtesting feature now, but I haven't brought myself, I'll probably get into it and I'll do a video and try to backtest on Tasty Trade. But they sent me an email, said, hey, we got backtesting now. So kind of psyched for that, but there's just so much to do that it's hard to find the time to do everything that I want to do. Oh, AI gone wrong says loans. Hot damn. Yeah. As soon as I saw Quant Bros 1, I was like, all right, I'm mortgaging everything. And then when Saylor talked about his triple maxi strategy, he's like, look, he counseled against margin use, which I didn't take his advice. Apparently, I had like 6 figures of margin I was using a month ago. And so it didn't, I'm still bullish on MicroStrategy for the next year, but it felt really good to reduce this margin usage. this 30 grand is very manageable. Like I could pull money off my HELOC to pay that off if I wanted to. So I don't even consider this really any type of risk, this margin use here. But $100,000 worth of margin in the account size that I have was pretty risky. So I'm very glad that I took some profits there, even though taking a little bit of that off the table will probably, shortchange my overall returns over the next year. But it just feels better. It was a weight off my shoulders. I thought I was being pretty responsible with my margin use, but when I unloaded it, I felt great. I was like, oh, wow. I didn't realize how much it was weighing on my mind. All right, BM says, if you didn't have position in either Bitcoin or MicroStrategy, what would you prioritize? So if I wasn't orange pilled, it's Tesla. The best trading advice I think that I ever heard was from Michael Saylor, and he said that you invest in an asset when it is 1, disrupting, and 2, the clear winner. And the examples that he gave, I haven't read the Mobile Wave, but the examples that he gave was like when Apple came out with the iPhone. Nokia and BlackBerry, they had monopolies, and so they were the last to see it coming. They didn't realize they were being disrupted. And as soon as you realize that the iPhone is here to stay and it's going to be a dominant monopoly for the next 10, 20 years, you buy it and you just hold on to it, and then you get rich. The other examples that he gave was like, Netflix disrupting Blockbuster, Facebook disrupting MySpace, and basically disrupting all of social interaction, really. Digitalizing and virtualizing social interaction is, everything's going digital at this point. So if it's disrupting, that's number one. And once it's the clear winner, that's number 2. And Tesla fits both of those, in my opinion. So before I was actually fully on board with MicroStrategy, Tesla was my main focus. And I'm still I'm still bullish as hell on Tesla, which is why I'm going to be transferring some of my 2025 profits, just in case the 4-year cycle continues. The 4-year cycle model may be broken this time, and maybe it's just number go up forever, but I'm not, putting all my eggs in that basket. So Tesla's catalysts are insane. So none of the other car companies that they keep talking about, the competition is not coming for Tesla. They're coming for each other. They're basically all fighting for second place. They're going to win the full self-driving race. I don't give a half a shit that Waymo and whoever the other one is have, driverless ride sharing now already. It doesn't matter. That's a parlor trick. They have all the maps are just mapped out with GPS. And the second something happens that the algorithm can't handle, the damn thing just shits the bed and someone has to come and rescue the damn thing. So, plus the business model can never work. It doesn't matter if Waymo wins, they still lose because they would have to outfit all the vehicles with tens of thousands of dollars of equipment. So even if they get FSD approval completely first, it doesn't matter because their business model is fucked. Tesla already has millions of cars on the road. The price is baked in, right? They're already spectacularly successful, and all of their cars already has all of the equipment built into the price, and they're ramping up production, so the prices are only going to get better. But all of that even being said, FSD is going to dwarf the profits on their EV sales. Like EV sales will be a rounding error at this part. So I really don't give a shit about their car production anymore. People are sleeping on their semis, their electric semis. That's going to go insane. They're talking about the 25K vehicle. Well, if the Model Y is already the best-selling car in the world, what's going to happen when something is 10, 20, 30% cheaper and so many more people can afford it? The future is going to be 8 billion humanoid robots. just running around everywhere doing all kinds of crazy shit. So, and that will probably that might even make FSD look like a rounding error. So, not financial advice, but if somebody held a gun to my head and made me sell all my MicroStrategy, it would just all go into Tesla. You're welcome, Nathan. Yeah, AI Gone Wrong says Tesla has full AI stack, hardware, software, and data. Yeah, they've got millions of cars. So whoever is going to, the people who are going to win the FSD race are the ones who have all the data. Waymo, what do they have? Maybe thousands of cars on the road. I don't know how many they have, but it sure as hell ain't millions. So the lead that Tesla has is only growing. And I know he can be a little distracted or whatever, and maybe he took a big chance siding with one political party over another. He kind of won that gamble, but maybe that was not a smart thing to do. But regardless, even if Musk stepped down right now, I think his DNA is already in the company, and they'll just profit for the next 20 or 30 years on autopilot. You know, basically FSD could run the company at this point. All right, I probably need to call it soon. I'm just going to catch up on these chats, and then I will drop. AI Gone Wrong says infra to capture data 24/7, and the software updates they do imply they have a pretty streamlined FSD deployment process. Data ingestion, model tweaking, QA deploy. Yeah. But you can see I still have just like my one or two Tesla positions. And so I'm definitely taking Saylor's advice. Diversification is selling the winners to buy losers. So I'm not willing to sell my MicroStrategy just yet, but mid to late October, or mid to late 2025, I will be diversifying out of some winners to buy some losers. If I could call Tesla a loser, I'll take it. So Will says, what's a conservative amount of shares to be happy with gaining weekly from options profits? Yeah. So with MicroStrategy, it's going to be hard to keep up. I think the covered call strategy is going to underperform, even just buy and hold, because of the unlimited upside that MicroStrategy is capable of. But during this whole session here, instead of buying shares, I was actually buying long calls here. So every time I sold a covered call, here I was buying long calls. So that's kind of how I accumulated, all of these long call positions. I think that's the only way that the covered call strategy can keep up with just hodling shares. I think, of course, buying shares will give you some unlimited upside, but I don't think it's going to be able to compete. Not financial advice, but I mean, if you don't need the money to lift off of, I just reinvest all of it, right? So if I was going to buy shares with my profits, when I sold $1,200 and got paid here, I would have. I think the price might have been around $250 at that point, or $300. Yeah, I would just use it all. I would just ape into 400, 4 shares at $300 with that $1,200. If I was in the business of accumulating, that's what I would do. But in this type of environment, I would probably, instead of shares, I don't know. Can I even get? No, you can't even get them for $1,200 anymore. Yeah. So at this point, and even to just buy April's, I'd have to sell like 4, right? I'd have to sell 4 $1,200 covered calls just to buy one of these. So yeah, I don't think I really answered that question, because I'm not sure that there is an answer. For me, I'm just reinvesting 100% of my of my weekly profits into MicroStrategy. But I mean, now I'm kind of unwinding it because I have debt that I need to unload. I still have 100,000 in debt on top of this margin use. So I'm not really adding shares or adding calls at this point. I'm unwinding this leverage. So my situation could be different. Daw says, will this be on YouTube as I missed your trading recommendations? Well, let me just clarify. I don't make trading recommendations. I just show what I do, right? I'm just showing every single trade that I make. And if people think, oh, yeah, that kind of makes sense, then they can customize that to their individual situation. But my lawyers are screaming at me that I don't have lawyers, but, have to say NFA like 35, 50 times. Oh, meant the learning option. Oh, recommendations. Okay, yeah. So I post this on YouTube as well. But the other everything that I learned about options was basically from Tasty Trades YouTube research episodes, and this kid named Inthemoney. He's a twin. His name is Adam, and Robinhood for beginners, Robinhood option trading for beginners. I've got a little playlist that I made with some of his stuff in it. Both of those resources are gold. And Bitcoin University used to be Trader University, and he's got a bunch of old trading videos that are good, and he's also written a bunch of books. So if you want to support a Bitcoiner, you can do that as well. Is there a way to simulate the option strategy? I assume, what is it, TD? Tasty Trade used to be involved with the TD folks, right? I forget what their platform is called, but there's some backtesting methods. I'm gonna try I'm gonna try Tasty Trade's backtesting as soon as I can. They just introduced it, but I'm not sure who has the best backtesting methods. I mean, there's got to be plenty of ways to sandbox, but I'm not sure. I basically just I watched a shitload of videos, and then I just started trading with my own money. You can sandbox trade just so much, but when you're not emotionally and psychologically damaged from your strikes being breached, you can't simulate that with fake money. All right, we're all caught up on the chat. We went through all the accounts, and thanks for tuning in. Be good, y'all.